Thanks for checking out this video. So in my previous video, I looked at the gold GORO's precious metal dividend program, and I left the video with a question of, well, how do you decide what allocation to use? And so this video is just some ideas I have on how to do that. So remember, in the last video, I was making a hypothetical $10 per month in cash dividends, which I'm then allocating between silver and gold. So here I have some columns. This is a percent for silver, and this is a percent for gold. And they always add to 100%. And this is the amount of dollars put to silver and the amount of dollars put to gold. And because I make the hypothetical $10 per month, they have to add to $10, which they do. So let me just walk through some ideas. And again, the yellow stuff is inputs. Although some of these percentages use data elsewhere in my spreadsheet, and I'll talk about each one of these. So each one of these rows, these are 17 ideas for allocating between silver and gold. So the first is just simply all silver. 100% silver gives you 0% gold, and of the $10, $10 goes to silver. So that one's pretty simple. You can do the same exact thing for gold. You can do a 50-50 mix, which is, I think, the example I had in the last video. So of the $10 would be split up, $5 silver, $5 gold. Okay, now we get maybe getting a little more complicated. These four ones are based on prices, so you can allocate according to the spot price of silver and gold. For example, typically you want to buy things that are all other things being equal. You typically want to buy things that have a lower price. So silver has a lower price than gold. So in this allocation, I would buy a lot more silver than gold. You can do the same thing with the minting premium. You want to buy things that have a smaller minting premium. And the one for silver is only $1.90. The one for gold was $30. So all things considered, buy more of silver. And according to GORO's metal prices, is simply adding up the spot price with the premium and allocating like so. Okay, last time I had calculations based off the current spot price, and then calculations based off of a very hypothetical future spot price that I just inputted. So if something will have a larger increase in spot price over time, you might want to buy more of it. So that's why I have allocation like so, to say the increase, the percentage change from current spot price for silver to future spot price for silver is greater than the percentage change from the current spot price of gold to the future spot price of gold, just by a little bit. So with this allocation, I put $5.42 every month into silver and $4.58 into gold. These two are based on are based on allocations of these metals in my current portfolio. So in my spreadsheet, it's a portfolio of stocks, treasuries, precious metals, peer-to-peer notes, Bitcoin, every single asset I have. So if I allocate according to that percentage, so this is information you'll have to get yourself from your own circumstance. But then I would put 70% into silver, 30% into gold, or roughly $6.97 into silver and $3.03 into gold every month. You can do a similar, so this would keep the percent This is a way to keep the percent constant of your metals in your total portfolio. You can do the similar thing with just looking at the percent of silver in your metals portfolio. So like a subset of the total portfolio. So for example, say I have silver, gold, platinum, palladium, copper, nickel, titanium. I mean, who knows what else, right? Excuse me. That would be a way of keeping the percent constant within the metals portfolio. You can do it based on the effort needed to reach your goals. So for example, say I have, I don't know, 10 ounces of silver, but I want to get to 100. So I have a lot of effort needed to reach that 100. Or say I have 100 ounces of gold, I wish, right? And I just want to get to 102. It's not a lot of effort needed. So this one bases it, I calculate the effort needed elsewhere in the spreadsheet and allocate according to that effort needed. Okay, another idea is, typically the advice is, say you have stocks and bonds, and as you get old, you want to allocate away from the riskier asset, put more into the less risky asset. And just a rule of thumb, you can do it based on your age. As you get older, as your years increase, put your years in percent into the less risky asset. But let's face it, silver and gold are both pretty risky, but gold is a little less volatile than silver is. So in a sense, in some weird, bizarre world sense, gold is like the bond, and silver is like the stock. So I just have an allocation here. Say I'm 35 years old. Then I put 35% into gold and the rest into stocks. As I get older, say I get to 65, more and more money per month is going into gold than silver. Okay, so that's just an idea. I have one that's completely random. So if I press F9, those numbers will change. And again, this is just an idea. You may want it as a way to do something different, a way to just shake up your portfolio. If you believe lots of prices and stuff are random, then, doing things random might make sense too. But this is just an idea. Okay, so now here's some other inputs. Say each month I want to put whatever dollars I have, I want to put X times more into silver than gold. So I say here 3 times more. Let's just do 2 times more. So that would be putting 33% into gold and 67% into silver. If I do 3 times more, I'm going to put 25% into gold and 75% into silver. And you can see that 750 is 3 times more than 250. You could say, of my $10, I want to put at least X dollars into gold, the rest into silver. So let's say of the $10, I want to put $1 into gold and the rest into silver. That would be this allocation. And you can see $1 going into gold and $9 into silver. You could say, I want to get X ounces of silver per year and put the rest into gold. So you have like a dollar goal, you have a relative times more than type of goal. You have a dollars goal, and this is just an ounces goal or criteria. So I get X ounces of silver per year and put the rest into gold. So let's put 2 ounces of silver per year. I want to put the rest into gold. So to do that, I would simply put $3.11 into silver every month and $6.90 into gold every month. Now, these are the simplistic to maybe more advanced allocations. These ones are average allocations. So for example, you may like a lot of different things make sense. So this is what this column is for. It's an indicator column that says use this column or not to calculate an average of the allocations that are indicated over here. So say allocating according to the metal price makes sense, according to the future spot price increase makes sense, effort needed makes sense, the volatility one makes sense, and let's say these ones don't make sense to you. Okay. So what this would do is this would simply take these allocations and multiply them by these indicators over here, and then just divide by the sum of these indicators. So it would take an average allocation. That's exactly what this equation is doing. And so you'd say, okay, 67%, 33%. So you can, if a lot of these allocations make sense to you, you can do that. You can combine them. And this one simply takes the average of all allocations. So it simply averages all of these to get the an average allocation. Okay, so I hope this gave you some ideas. There are probably many other ways to allocate. This is just some ideas I have. You know, just 17. Let's see. Yeah, I think there were 17 different ways you could allocate that I came up with. But feel free to come up with your own. I think it's good to think about, and it makes it simple here because we just have two metals, silver and gold. So it's pretty straightforward to think about. Anyways, I hope that helped out, and I look forward to reading your comments, hearing your comments, and I'll see you next video. Thanks for watching. Bye-bye.